Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first thing I do is teach a course where traders learn two very specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally because of an earnings announcement or some other related news event, it creates an opportunity. The opportunity is for traders that can identify a specific price where a stock will first be drawn to and then have a price reaction from in the other direction. These are the high probability trades we want. These are the trades that prove successful the majority of the time. The second thing I do is give traders an opportunity to get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a list of the gap trades that were sent out Friday morning, August 18th, before the market was even opened for trading. And as you can see, we had 7 potential gap trades on the board today. And out of this 7, we're going to take a look at 2 specific stocks. We're going to look at Foot Locker and we're going to look at Deere & Company. Foot Locker, I say gap lower. Support levels are $34.84 and $32.60. Stop and profit target is about 25 to 45 cents. These are minimum profit targets. If a stock does not come in to the specific price level that traders learn how to calculate in the course at Lazy Gap Trader, we don't want the trade. These calculations represent the highest probability trade setup on the board. It represents where the stocks are likely to have a price reaction in the other direction. The other stock we're going to take a look at is Deere & Company, and you'll see I say gap lower. Support levels are 112.81, and I gave 2 secondary support levels that didn't hit their numbers, but that's okay. Stop and profit target is 40 to 75 cents. Minimum profit target. Wait till you see the rip that Deere took. And of course, it was a little bit of a heartbreaker. We're going to look at this stock also. Then I give a list of potential gap fill trades for the day. So what I'm doing is I'm giving traders opportunity. I'm giving them the stocks that if they were to come into these specific price levels, these are the areas that should produce price reactions in the other direction and therefore profitable trades. Out of this list, JEC, which is the first one on the list, the gap fill level was $49.99. It's a long trade, meaning we're looking to buy the stock if it came into that price. And we'll take a look at that trade also. And then we're going to look at HAS, Hasbro, and the gap fill level is $96.03. Something very specific that's taught in the course happened with this stock, and I just want to point it out to traders. The first one we're going to look at is Foot Locker. You can see where the stock closed all the way up here around $48 a share the prior trading day. On Friday, the stock was opening at $36.55 and traded lower. That's quite the haircut for Foot Locker in one trading session. Now, what we're able to do is identify a level, and mind you, the stock was down 25, 26, 27%. We can identify a level where the stock will stop falling and likely have a price reaction in the other direction. Sometimes it will have a big move in the other direction, and sometimes it'll have a small move in the other direction. Unfortunately, we don't know which one is which. However, what we can do is identify the area where the stock will stop falling. That was $34.84. You can see what happened. The stock came into that level, bantered around for a little bit, and had a high of $35.50 off that level. So that represents a gain on the scalp trade of about 66 cents maximum gain. Now, of course, that's 2% of the price of the stock in just minutes, but that's on a stock that was down 26% at the time. I'll challenge anybody to find a system where they can learn specifically where a stock like this will first be drawn to and stop falling and have a price reaction in the other direction. Traders learn exactly how to do that in my course. The other one we're going to look at real quick is Deere & Company. Now, this was a bit of a heartbreaker, and this happened happens, but some traders got in the trade because they jump in front of the number. That's up to them. I trade the actual numbers. The number listed in the email was 112.81. Mind you, these are the same exact price levels that traders who have taken the course are able to calculate each and every day for themselves. The stock closed the prior trading day at $124 a share, opened this session at $115.43, and traded lower. The stock made a low of 112.87, just 6 cents above the level that we calculated, and was sent to traders at 9 o'clock in the morning before the session began. Look what happened to the stock. As soon as it didn't hit that level, but as soon as it came in that area, it reversed and it made a high in the day of 118.41, basically a $5.50 rip higher. And this is what I was talking about before. You never know which ones are going to rip higher like this and give you a multi-dollar gain in just a matter of minutes to hours. The next one we'll take a look at is JEC. This was off the gap fill list. Remember the number, $49.99. The stock came into that level first thing in the morning, making a low of $49.71, certainly well within the stop loss limitation as described in the course. And what happened? Just a little while later, the stock was at a high of $50.60, representing a maximum gain of about 60 cents, well over 1% gain on the trade. These are scalp trades. These are day trades. Sometimes we get big trades. Sometimes we get smaller trades. But what we do get the majority of the time are positive and profitable trades. And when you pile these up one over the other, day after day after day, that's how you grow a small account to a big account. That's how you grow a big account to a bigger account. The last one we'll take a look at real quick is Hasbro, HAS. Now this one, the gap fill level was $96.03. And you can see that the stock traded through that level. But something very specific happened before the stock got to the level, which is taught in detail, very specifically in the course. This is what kept traders away from this stock. Just as important as identifying price levels where a stock will have a price reaction in the other direction, it's also important to know which trades not to take, which trades have the best setup, and which trades have the setup that's telling you trouble is ahead. And I teach that specifically in the course at Lazy Gap Trader. Traders learn everything they need to know in order to trade the gaps successfully. If you want to learn a trading strategy that you can use each and every day for the rest of your trading career, come over to Lazy Gap Trader, check out the course. You can learn everything you need to know in order to trade the gaps successfully. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.